welcome to China Money Podcast, your source for local insights and knowledge on investing in China. Remember to go to our website at chinamoneypodcast.com for more great episodes. I'm your host, Nina Xiang. Our guest today is Tom Delatour, Chief Executive Officer at Beijing-based Central Bridge Capital. He's talking to me here in Hong Kong. Hi, Tom. Welcome to the podcast.
Well, thank you for having me, Nina.
So maybe give us first a brief introduction of Central Capital.
Central Bridge Capital is a Beijing-based company. We focus on investing in Tier 2 cities with regional developers to build housing that the middle class can afford.
Why focusing on Tier 2 cities?
Well, if you look, you have to back up a little bit, and if you look at China over the last 6 years, from 2006 to 2010, when you were having price increases in cities like Beijing and Shanghai that was growing at a very rapid rate, in the Tier 2 cities, you had housing prices growing at about 11.9% a year, but household income was growing at 13.1%. So you actually had the affordability for housing for the middle class in the Tier 2 cities to really stay stable or actually slightly improve.
Now, there are many different investment strategy when investing in Chinese property. You can either take a minority stake, majority stake, or form a joint venture, or making onshore or offshore investments. What are the pros and cons for each, and what's your preferred strategy?
Well, for those people who do the offshore, the ease of offshore is someone else must have already had a structure in place, and so getting your money invested is a simpler process. But you're actually separated from the real assets, so that has risk associated. Then you can do an onshore investment, and most people do some form of contractual joint venture with the developer. And depending on investors, they may put 70–80% of the equity up, or maybe they only put 40% and have the developer put up 60%. But you have better control rights if you're onshore.
When you do joint venture investments with local Chinese partners, how do you make sure that the interests are aligned between the local partners and investors like you?
Well, this is a very critical question, and the consensus is that you want the developer to also put some equity in, and there was a difference of opinion how much is enough, 20%, 50%, but you want to make sure that the developer has equity involved, and then most foreign investors want to have some kind of situation where they get a preference or get their money out quicker, but they're willing to give much more upside to that developer.
And now, lastly, you've made your money as investors. What are some challenges regarding repatriating that money offshore, and how do you manage that?
Well, it's very interesting. If you bring the money in correctly and legally through the proper channels, and you're investing in product type that the government encourages and wants, which they clearly want more middle-class housing, then the repatriation process is an administrative process, and it's timely. I've heard horror stories, everybody's heard horror stories, and when you dig deeper into these stories, usually somebody was doing an investment the government really was not encouraging, or they didn't bring their money in through the proper channels.
Thank you so much, Tom.
Thank you.
That's today's podcast. I hope you enjoyed it. If you have any questions or comments, go to our website, chinamoneypodcast.com, where you can see more episodes with other great guests. You can also subscribe to the podcast on iTunes. Thank you so much. Until next time.